Hello, scholars. Today we are going to discuss about financial market ecosystem. When we discuss about investing, it means we are buying some financial asset or maybe physical asset and holding it for some time. Then either we are earning from the rental income or capital gain after we sell it. So essentially, it is the market where we have to buy and sell. Now, there are 100 types of market: commodity market, car market, healthcare industry, or grocery store. Similarly, there is a financial market as well. Now, when we talk about market, it does not mean it has to be have a physical presence. It can be online as well. For example, Amazon is the market where products are listed. Similarly, stock exchange is also a market where financial instruments are sold, bought and sold. So basic structure of market is very simple. There is some sort of goods or services, and there is a buyer and seller. It is possible that buyer and seller directly interact with each other and do the transaction. It's a very simple form of market. Sometime we need some agent in between to do the transaction. For example, property transaction, or if you want to buy the car, we go via the distributor. So goods is always there, whether it is car or stock. Goods is the first step. Second is there is a buyer, there is a seller, and there is fourth entity coming as an agent. And it is intermediary. Sometime if market is bigger, then we need some watchmen so that there are no theft or any problems in the market. So fifth player coming to picture, it is a security guard or watchman. So essentially, there are four players, or we can say four entities which involved in the market, all types of market. On the same vein, we are trying to understand the financial market, which we will say that there are five pillars of financial markets. First is instrument, second is issuers of the instrument, then investor, or those are the buyer of that instrument, then intermediaries, and institution, or the institution which regulate the market. Now, when we talk about instrument, this is only financial instrument. Okay. And if you want to understand assets, there can be three types of asset: physical asset, financial asset, and intangible asset. Asset we define that as anything which can generate income by either selling or renting. So we classify this asset, and remember this classification, it will be seen in the balance sheet of company as well in the same order: physical asset, financial asset, and intangible asset if there is. So how to remember? I said that I make some acronyms or some sequence so that you can remember: physical, financial, intangible. So three classes under which first is physical asset. You see that this agriculture lands or plot. When you buy land, agriculture land, plot, it is immovable asset. We can make a profit after selling. Then building. Building is also asset. These are the real assets. C is commodity, machine, or anything which are movable. It can include gold, silver, and machines as well. Okay. So A, B, C, D, E, F. These are the financial asset. We are going to discuss detail about debt, equity, and derivative is not a part of IMP, but debt and equity. Okay. So this D, E, F are the financial assets, and intangible assets like goodwill, human capital, intellectual property right. How do you remember this asset classification? It's very simple: A, B, C, D, E, F, G, H, I. Easy to remember. And this is the main focus of our discussion. So let's go to the five pillars again. So when we talk about instrument, instrument means financial instrument. What is a financial instrument? Definition of financial instrument is: financial instrument is a claim on the property or cash flow or any asset. Okay. So financial instruments are claims in which there are two parties involved. One is issuer and investor. Okay. So all financial assets in the world are issued by the entities like government, banks, companies. Government and bank issue debt types of asset. We are going to discuss detail about each asset. This is just classification so that you will have the framework of broad understanding. Five pillar. Today's discussion is focusing on upon the framework of financial ecosystem: debt class, equity class, derivatives. Who issues this? Government, banks, companies. Companies can issue equity. Company can issue debt as well, but government cannot issue equity. Then investor. In the financial market, investor are individual like us, individuals, families. DII, that is domestic institutional investor. Those are mutual funds or pension funds or insurance funds. Those are DII. FII are the foreign institutional investor. They come from the abroad and they invest here. And there are proprietary firms. Proprietary firms are the big company, or we say big player. They trade for themselves. They don't take money from others. DII, FI is essentially taking money from the retailers. So these are the investor. They buy and sell among each other in the secondary market. And then intermediaries, agents, broker, custodian, depository, stock exchange. There are many intermediaries without which we cannot do all transaction. They are useful in all completing a transaction. And then institution like SEBI, IRDA, RBI, that is Security Exchange Board of India, Insurance Regulatory Development Authority, and so on. This is pension related. So these four institutions are regulating financial market. Okay. After watching this video, assignment is this for self-study. What you are going to do, you search on the Google, what are the functions? You can use ChatGPT or Gemini. What are the functions of SEBI and RBI? You can visit their website as well. What are the types of broker? There are two types of broker. One is low cost broker. They are also called as discount broker, and high cost. We say that you never open account in the high cost broker. They are service broker. Especially banks and old brokers are high cost broker. Low cost broker are online broker, maybe Zerodha, Grow, Dhan, and there are also others as well. We don't recommend any specific broker. And then that you have to again search depositories in India and their functions. Okay, what are their functions? So the way we deposit our money in the bank, we deposit our securities. Securities is other word for financial instrument. Okay, there is one more word, scrip. Okay, these are the one and same. Financial instruments, securities, scrip. These are same. So we deposit security in the depositories. The function is only saving our securities in our demat account. It is called as a dematerialized account. It started 20 years ago, demat account. So today's assignment is very small. You have to just find out some information on the Google and write in your notebook. Okay. Thank you very much.